Singapore investment company Temasek Holdings' net portfolio value rose by $17 billion to a record $215 billion last financial year, helped by the global rally in shares. But its net profit was flat at nearly $11 billion due to lower contributions from its portfolio companies. Temasek says it expects markets to remain volatile, but will also present investment opportunities.
Presenting its performance report at the annual Temasek Review, the investment company said its portfolio value has more than tripled since March 2003 to hit a record of 215 billion Sing dollars as at end March this year. The rebound in global stock markets has helped to boost Temasek's portfolio, 70% of which are listed companies. During the year, Temasek also improved its total shareholder return to 8.86% compared with 1.5% previously. Temasek says it invested a total of 20 billion Sing dollars and divested 13 billion Sing dollars in the fiscal year, and adds that it has the resources to take advantage of investment opportunities ahead. As at end March, Singapore accounts for 30% of its portfolio and China at 23%. Despite slowing growth in China, Temasek's maintaining a positive view of the economy over the next 15 to 20 years.
As the government try to address the financial system risk, as well as some of the social concerns that they have, by reforming the markets, going through structural reform of the economy, you will find disruption. That I think is a given. But I think what is more important for us to focus on are the longer-term benefits of such reform and the potential that this reform would bring.
Temasek says its portfolio will still be anchored in Asia 10 years from now, but at the same time it's eyeing investment opportunities in Europe and North America.
The U.S. is an interesting place. It's clearly a center of innovation. Our goal, as part of the 4 themes that we talked about, is really to find companies that has a comparative advantage, whether it's in the healthcare space, whether it's in the technology space, whether it's in the energy space, where the companies we look at has either in the forefront of innovation or doing something that's, that allows them to grow above the GDP rate.
Still, some observers warned of potential downside risks ahead as a result of Temasek's sizable exposure to the banking sector and the region.
It's not quite a diversified private equity portfolio, and so there will be some of these issues coming up. The next big growth story, will it definitely be just in Asia? US are definitely showing signs of recovery. Japan exposure, it's not there right now. I don't see it reflected. So could Japan be another good market to look at? So these are some of the things, some diversification.
Observers say another area that Temasek will need to look at is leadership succession. To this end, Temasek says its board has held annual review and planning sessions since 2005 to look at succession plans for its CEO and chairman, and the process is still ongoing.
Despite the recent interbank credit crunch in China, Temasek has defended its investments in Chinese banks. Temasek says the banks it has invested in are well capitalized. One of these banks is China Construction Bank. Temasek has a 7.4% stake worth about $16 billion. That works out to 8% of its portfolio, making China Construction Bank the second largest single stake it owns. And together with Singtel and Standard Chartered, holdings in these 3 companies make up a third of Temasek's portfolio.